Hi folks, welcome back. Hope you are doing well. Today we have a lecture 34 of ICT A to Z beginner series. In this lecture I am going to show you ICT cell model, market maker cell model. So make sure you watch this video till end. This example will be going to in SP 500 time frame. And if you are new to our YouTube channel, make sure you watch this full series. It will be really helpful for you. It's free content from all ICT models. And if you are new to our YouTube channel, make sure you join our Telegram channel as well. And if you need some good broker or some good prop firms, you will also find the link in the description below. Okay, before I jump into the example, let me show you some theoretically in the chart. Okay, so in cell model you have a confluence that price will reach that area, and from there it will be a reverse, right? So it can be your POI, fair value gap, order block, anything. So in cell model you will see a consolidation, okay, original consolidation, and then market leave that consolidation sharply. It can come back or retest that consolidation, or it cannot be. Okay, first stage of accumulation, second stage of accumulation. The accumulation phase of 1 and 2 is not necessary. Like if one accumulation is happened, does not necessary that second accumulation should be happen. Okay, then it reach to the your POI, the smart money reversal area, and then you can say also a low risk sell area where you will sell first stage of distribution, second stage of distribution, and the liquidity. Okay, so consolidation, accumulation, reaccumulation, smart money reversal, distribution, redistribution, liquidity. Consolidation, first stage of accumulation, okay, sorry, original consolidation, one accumulation, and then smart money reversal, one distribution, and to the liquidity. This can also be open. This also be a ICT market maker cell model. Let me show you the example in the chart. So we have this 4-hour fair value gap. Folks, now pause the video and see what happened in this specific area. If you didn't pause, it's your fault. We have this consolidation, right? Market leave that consolidation, retest that area, you see by this one, first stage of distribution, and then we have this area that price should retest or we wait, but it did not. It go to all the way here, come back, we have this fair value gap here, price go again. So we have this liquidity sweep, smart money reversal area, a low risk sell, we have this market structure shift here. Okay, because these leg once is coming down, if it's close below this low, then we consider that it is a market structure shift, and the price is now moving to the liquidity of below of the original consolidation, but it did not, right? So it's go upside, sweep, and then we have this swing low, you see, before candle, after candle, did not break, market structure shift. Okay, and then you can sell here once it's the liquidity sweep, market structure shift, and we have this order block, price recome, distribution, and then this. Okay, your first sell area, or you can say your distribution area, first distribution area, a second distribution area, and then you have this liquidity. Okay, in the latter you will see also in the PM session, you see this fair value gap, right? This liquidity. Okay, this for your extra knowledge. So here consolidation, accumulation, smart money reversal, and the distribution. All right, so as you know, the ICT model work on a specific time. So what the time that price reach to our area? 10 o'clock. AM New York session. A silver bullet time also, smart money reversal to the downside, right? Again, price coming to what area, what time? PM session. We have fair value gap, boom to the downside, liquidity, right? So price, internal liquidity to external liquidity, from external liquidity to the internal liquidity. Okay, so I hope you learned something from this video. Until next time, be safe.